As we continue to break down the effects of yesterday's decision by the Fed to raise interest rates by 75 basis points, we welcome in Vincent Reinhart, chief economist and macro strategist at Dreyfus and Mellon. Vince, it's great to see you as always. I'm less concerned with 75 basis points, of course, than I am with what happened during that press conference yesterday. Was this Jay Powell's message to the market? The Fed's going to do what it has to do and is not going to be sort of influenced by market forces, for example.
I think it was a reminder. There was no Fed pivot there. Since Jackson Hole last August, Jay Powell has been telling us that the Fed has to raise the federal funds rate into a restrictive range and then hold it. What Powell did was update that assessment of strategy. The level they have to raise rates is higher than they previously thought because inflation's more entrenched. Aggregate demand's got more momentum, resources are tauter. And then he gave us an update on the tactics. Yes, they're going to get the funds rate to a high level. That's a decision about how fast to raise the funds rate, how high to go, and how long to keep it there. Well, he basically said if you've done 4 3/4 percentage point hikes in a row, you've mostly front-loaded all the monetary policy tightening you need. You can slow down from there. So they're going to a higher rate. They're going to hold it there. That strategy isn't news, just only about the level. And they're mostly done with front loading. They can slow the pace of firming after this.
Vincent, we're, of course, going to get some Fed speak in coming weeks from various members. What do you think their message will be to the markets?
So I think, and I think, Julie had it right earlier in the conversation. We're talking about the Fed's goals. The Fed has a dual mandate, maximum employment and stable prices. But right now, they're miles above their inflation goal. Inflation is just too high relative to 2%. In that environment, they can all agree to talk about one thing. Inflation's too high, they got to get it down. And that's what you'll hear about. The issue to listen for going forward is that they begin to express a little fracture in that resolve. As inflation comes down, as the unemployment rate goes up, as we go into recession, you're going to hear policymakers express a wider range of views, not over this intermediate period. This intermediate period, inflation's too high. They all have to speak from the same page of the hymnal.
And so where will employment be at? What will the situation look like by the time the Fed sees inflation come down, by the time their policy stance and the goals therein are actually reached?
So I think Jay Powell admitted the path to a recession-free disinflation is pretty narrow. In fact, as inflation gets lower, it's going to be because the unemployment rate is rising above where it is now. 3.5% is historically low. Resources are taught. They have to slow the rate of growth of aggregate demand, bring it more in line to below that of the growth of aggregate supply to create resource slack. And that means the unemployment rate is going to be going up a couple percentage points. Not right away, but when it starts rising, it goes up fast.
Vince, put it all together for us. Will there be a recession? When will it happen? And how bad will it be?
Inflation is high enough. The only way the Fed can get back to goal is slowing demand so much that it creates a very high probability of recession. Yes, 6 to 9 months from now, we'll be in a recession. Will it be that bad? Don't think so. Recessions correct excesses, and we haven't built up a lot of excesses, but you never really know what's on people's balance sheets until you prod them. And we're going to learn something about risk taking. We're going to learn something about the health of balance sheets. We might not like what we learn. At this point, I would say a shallow recession, but in history books, it's going to read pretty long. Remember, real GDP actually contracted in the first half of this year. add a contraction in the first half of next year, and 2022, 2023 is going to remind a lot of people of 1980, 81, and 81.
All right, we'll leave it there. Vincent Reinhart, Chief Economist Macro Strategist at Dreyfus and Mellon. Always good to see you. We'll talk to you soon.
Thank you.